All right, good morning, traders. Happy hump day. Happy Wednesday. Potentially happy final Fed meeting of the year. So we'll jump in here, guys. Gonna make this a quicker one here this morning. I got to try to run a quick errand before the open. But I mean, today's the big day. So, in terms of the structure of the market, you've got the weekly squeezes, the daily squeezes to the indexes. So from, an S&P, a QQQ perspective, the pitch in terms of your daily or weekly squeeze that could take you, into that Santa Claus rally. We have the structure right now. It's just a matter of whether or not the market gets through the Fed today. I'm not going to go too deep into what I think the Fed has to do today to please the market gods, but I do think the tone of the next month or so could potentially be set here today. So I think you probably sit on your hands today until the last hour or so of the session. Just kind of see how the dust settles here. But that's pretty much going to be my focus right now. You get the daily squeeze in the S&P, and everything gets a little bit sloppy here. So you could look at this market from a few different perspectives. For me, it's easy enough to say, hey, you pulled back to the 21. Here's a squeeze, there's a squeeze. From another perspective, though, the breadth in the market kind of sucks. And we're starting to see things like Microsoft, for example. We talked about on Monday, and we talked about over the weekend in the watch list video. This goes from being one of the better looking setups in the market to a total dud yesterday. Now, I actually think it gives you a better entry at this point for a January, February swing. But this is a little bit what we're seeing here, where Google comes into the week looking really hot. And give Google credit, kind of bounce like a bat out of hell here. But interesting times for sure. If you go sector to sector, energy looks decent. Healthcare looks decent. Industrials look decent. So all in all, guys, it comes back to this chart right here. If the S&P 500 can fire that squeeze to the upside, you just want to be positioned in some good-looking trends. So I continue to like the QQQ. I continue to like the semiconductors here. Still printing some buy signals. But then you could take a look at healthcare. Good-looking daily squeeze here. Great-looking weekly squeeze. So S&P 500 fires a squeeze to the upside, just kind of based on the trend and the structure. Healthcare could be one group here poised to trade a little bit higher. Then I think you got to look at the home builders. To me, this is a buyable dip here. Getting my early buy signal. No daily squeeze just yet, but if we can spend a few more days here near the 21, then she starts to print a new daily squeeze. And you got weekly, daily stacked DMAs. You got the green 10x bars. So if the S&P, and granted, this has kind of been moving without the S&P. So the home builders here are currently in their own little world. But if the overall market fires higher and then we rally for the next 3 to 4 weeks here, I think you look for the trend in the home builders to continue. So within that group there, you got Dr. Horton. Pretty much a mirror image. And then to a smaller extent, there's the Home Depots, there's the Lowe's of the world. So I think today you want to be patient, and I think a lot of what you want to do today is just have that watch list ready. Maybe you have some things on your watch list today where if Powell comes out and he's just the total Grinch and you don't get that Santa Claus rally, have a watch list of 2 or 3 spots you might want to short. And if Powell comes out and disappoints today, then you could probably just short the overall market. But then you have something like the communications. So the S&P looks fine, but this is a little bit of the distribution you're seeing under the surface. Communications look really sloppy. Negatively stacked DMAs, red 10x bars. So they're probably going to be the first to puke it up even more if there's a negative reaction today. So have a few things like that on the watch list. But then I think you're going to want to have QQQ. Apple, Microsoft. I think you want to keep an eye on the semiconductors. Stacked DMAs over here. So Nvidia. Market rolls over today. There's no Santa rally. Down goes Nvidia. Probably to 250. First trip back to the week 21 since October. But if the S&P 500 fires our daily squeeze, we get that 4 to 5 weeks of momentum. I think Nvidia here at the 50 that's poised for a pretty good push. Just remember though, market goes down, down goes everything. So your watch list, in terms of bullish opportunity, really try to narrow down to those spots that should perform well if you get the move here, with the understanding that if this breaks down, most likely just about everything breaks down. So the home builders, I think, some semiconductors, and we'll look at a few scan results here. But until about 3 p.m. Eastern, going to be a day of patience here. So in terms of our open positions, we have got some AMD still. And nothing we want to add to just yet, but a pretty good hold here of the 50 yesterday. You'd like to see it back above the 21, because technically you are firing a squeeze to the downside. So I'm not going to add to that just yet, but I am going to hold tight. This should be one of the better groups here if the market can break out. So most likely, if that's going to be the case, you're probably going to be served well with some AMD. Nvidia has a very similar structure. Then you got Qualcomm. Probably the best looking daily squeeze in the semis here is Qualcomm. So we got a little AMD here. We still have Amazon January expiration put credit spreads based off the weekly squeeze. I'm comfortable in the weekly squeeze down to about 32.50. So we're holding on tight there. We got some roadblocks. And even with the move down over the last few days, you're still getting buy signals. And without going too much into my indicator, pretty much what that means is you're still getting buy signals as it pulls back, because the current dip here hasn't been enough to change the trend, the structure, or the momentum of your daily or your weekly chart. In other words, it continues to be a buyable dip. Where with AMD, for example, I'm not getting my buy signal anymore. So all that you need to know for now is that means, okay, you're pulling back a bit, and you might be holding key support, but the pullback was enough to shift a little bit of structure and momentum to either your daily or the weekly. So we got some roadblocks there for January and February expiration. And then the interesting one is going to be Tesla here. So what you want to look for, again, this comes back to the market. But for those of you that like to day trade, for those of you that like the weekly expiration plays, it's going to come down to the reaction in the overall market. A lot of people get in position short over the last few days. What was the exact number? I can't think of the exact number, but a lot of you are familiar with Sam from the options room. He sent me something yesterday that I think was from Tuesday or from Monday rather. I think it was pretty much on Monday. There was more puts traded than we've ever seen in the existence of the market. So in other words, there's a potential here that the bears are going to get rich, or it could be one hell of a short squeeze. So if JP comes out, dances however he's got to dance, market likes a reaction, look for things like AMD, like Nvidia, like Tesla, that have kind of been selling off this week down here at -1 ATR, down here at -2 ATR. Look for them to rapidly bounce back towards a 21. That only happens if the S&P and the QQQ here hit that blowout reaction. And into Thursday, into Friday, the market just slams the shorts. Again, I'm not saying that's going to be the case, but for those of you that like the shorter term swings, look for that kind of opportunity. Good reaction to the market, you probably quickly see an AMD heading back towards a 21 EMA. Same thing goes for Nvidia. Same thing goes for Microsoft. Same thing goes for Google. Same thing potentially goes for Tesla here. So just kind of a side note, a little bit of selling pressure, call it rebalancing, whatever you want to call it. You get a big rip in the market into the weekend. The AMDs, Nvidias, etc. that are trading towards -2, you might get a pretty solid bounce. Now, Nvidia, AMD, Tesla, everything probably bombs here. Well, they definitely bomb if the market bombs. But for those of you that like that kind of stuff, could be a few plays here. But in terms of Tesla, so I would be, in terms of a new trade here at this point, The appealing chart is the weekly chart. So it's your first pullback at the weekly 21 since you really got back into trend here. So from a bigger picture perspective, at least for me and how I like to swing trade, this is really my first big time buyable dip in Tesla since the move starts back here in August. So in context of trend, you're going to fire a squeeze. You're going to, this was a crazy push. So let's not forget that. This thing almost freaking doubles in a few weeks. But context of trend, you push away from the 21, you pull back to it. The only thing I can see working on Tesla right now is deep out the money February expiration put credit spreads. Like really just try to come out here, work some short puts it. There's probably some big premium here. In other words, though, okay, here's your buyable pullback. Understand your buyable pullback doesn't mean it doesn't go a little bit lower. Doesn't mean you rally immediately. So slowly try to work some, longer dated trades here on the short premium side of things. Where I think we start to look for those, more directional, shorter term swings on a Tesla here is in your daily chart. Pretty much looks like that. You need a bullish daily chart. In terms of the next few days here, again, it's the ball is pretty much in the market's court. Pay close attention to the 950. So again, a lot of next few days here, it's going to be half. All right, if you're a day trader, if you're a short-term trader, you're probably going to have some opportunity here. There's going to be either most likely some pretty solid bounces into Friday, or there's probably going to be some more volatility. So I think for the shorter-term traders here, really focus on that 950 level for Tesla. Your gap up to 950, they buy the dip. So there is the potential here where everybody buying Tesla at 950 on the gap, on the pullback over here, they're probably setting their stops right under 950. So there is the potential you come down, you run all those stop orders, then you start to bounce. This has no shot of bouncing, though, without a big bounce in the market. So for Tesla, if you're looking for a new trade here, you look for a good reaction in the market. You maybe look for some ready, aim, fire buy signals. You try to play the bounce into the falling 21 EMA. It's about an average true range move and a half to the upside. There could be that next couple of days here. There could also be the flush down to 900. So really focus on that 950 level. Focus on momentum for a couple shorter term trades here over the next few days. And then for those of you that like to swing the stuff like I do, finally kind of coming back to earth. Just understand, we could sit here for months. But 900, that's where I want to work a little bit of deep out the money short premium. But I think Tesla's fate, I think Amazon's fate, I think Google's fate, all going to come down to this afternoon. So that's what I got for y'all for now. Go through a couple scan results here. If you like anything, feel free to take it and run with it. But one of the better looking setups in the market here, I think, is Home Depot. Great trend, daily squeeze, buy signal, weekly daily stacked DMAs, weekly daily green 10x bars. Let's see what we got here for squeezes. Daily 4 hour. So Home Depot looks pretty clean here. Then again, you have Qualcomm. So Qualcomm is a bust if SMH is a bust. Qualcomm probably a pretty good push here if the indexes and then SMH get it going. Weekly, daily stack DMAs, green 10x bars, daily squeeze. So Qualcomm looking pretty good here. And then another, I think, interesting one is Ford. So the last week is probably the first time we've ever talked about Ford together. It's a good looking setup, though. Getting trend going. Bunch of buy signals, stacked DMAs everywhere, green 10x bars everywhere. So I do like Ford here. I think that's pretty clean. Not one where I'm going to work a credit spread. Just not enough premium. But, 19 strike, 18, 19 strike in the money calls. Probably a pretty nice way to try to catch some continuation. So Ford looks good. Home Depot looks good. A couple of the semiconductors continue to set up nicely here. Let's check out Lowe's. So either Lowe's or Home Depot, they should move together. So you pick your flavor there. So, just kind of visually run through the scan results right there. There's plenty of good-looking setups out there. They probably all go to crap if the market falls apart here this week. And vice versa, they all got good structure for a push higher if the market allows. But mainly there, guys, Home Depot, Qualcomm, Lowe's, Ford. Few of my favorites right now. But all right, guys, that is what I got for you. I can do a couple questions here for a few minutes. And I got to run my errand real quick before the open. Actually, let me make sure I don't have the open today in the options room. Nope, not today. All right, but that's what I got for y'all. Let me get jumping in the chat here. Hey, good morning, Terry. Good morning, good morning, good morning. So, my man G, Big G, for the financials, the daily chart has a little bit of work to do. So if we can start to get a couple consistent closes back above the 21, stack DMA is back into the mix. Just a little bit more oomph to your daily chart like you had back here. Then I think it's setting up nicely because though the daily chart isn't quite there just yet, check out the weekly. Right, so that whole big dramatic flush here, pull back to the weekly 21. It's not to say the trend has to continue, but we just take the trend and take the chart for what it's worth. You pull back to your weekly mean, typically after a push into about 2 to 3 ATR. Now you have a weekly squeeze. You have positively stacked EMAs. You just need those lower time frames to kind of provide the spark to get this weekly squeeze going. So for comparison's sake, let's go look at a daily chart back here when you got that most recent push off the weekly 21. We're above the 21 EMA. Histogram is positive. Get your stacked EMAs back. It's going to be a process here. And like everything else, it goes, kerplump if the market does. But a little bit more momentum. A couple of closes above the 21. Once that daily squeeze looks like it's gearing up to make a move, that's when I think you want to be long for the continuation of the weekly trend. We could say we're pretty much there for the S&P, right? Pull back at the 21, weekly squeeze. Now the daily chart is trying to clean up. You're at the 21, you have stacked EMAs. Our histogram is trying to flip to bullish here. So a lot of what we're seeing in the market is pretty much that. Pull back to weekly support. Can we then build the bullish daily chart that we need to get that continued push? So I think like the S&P and like everything else here, financials, they're trying to build that bullish daily chart that can take you into higher prices there. Good morning, good morning. So DCOV 989, am I waiting for it to get to the 21 EMA before I buy it? Which ticker exactly? Which ticker exactly? Phil, if we get a rip, should we start loading up or keep it a small lot? Loading up meaning 5% of your account. So, I mean, good question, Phil. That's going to be different, of course, for everybody, depending on everyone's individual risk tolerance. What I would say, position sizing is important. What I would have you focus on a little bit more here, Phil, is structuring a trade where you can sit through a little bit of noise before we get the push. Right? And a lot of times those are the trades that we can get a little bit bigger into. Meaning instead of next Friday's expiration out the money calls, maybe go January expiration in the money calls. January expiration, out the money put credit spread. In other words, the better the odds are that you can hold on to a lot of back and forth, the better the odds are that ultimately you're going to get paid from the push higher. What I've found is the more time I give myself, so I go 30, 40 days, I do a put credit spread instead of long calls, I can work up to a bigger position size. I hold on to through the noise a little bit more comfortably, and all said and done, I'm probably making the same as the guy who bought the calls. However, I end up catching a lot more moves because I can sit through a lot more. So that right now, Phil, I think is the key. You know, get your risk where you like your risk, but really structure something where if we got to chop here for another week, you can comfortably sit through that. Terry, you're watching Tesla. I think many of us shall be. I think many of us will be. Let's see, Cobra, you got some Neo here. Um, Nothing for me going here in Neo. Now another one where you're pretty oversold. So again, it's the big if. Probably the biggest if you know, of the remaining year here. But if the market gets a good rip going, you know, things that are oversold like this, they might bounce nicely. So there could be that oversold bounce here, just kind of based on trend and structure. Kind of got more so downtrend characteristics versus uptrend. So there could be the big bounce. I probably wouldn't do anything with it other than that. But that comes down to the market. It might be easier to try to play that bounce, something that holds up a little bit better, still, in an uptrend. And then for General Motors here, so pretty much this is going to be like, it's going to be like the financials we just looked at, where you got a decent weekly trend, you trade in at the weekly 21, you have stacked DMAs, so you're at a level here where you could get the continuation higher. You need a bit more of a bullish chart to get that continuation higher. So pretty much like XLF here, just try to work some patience. Couple of closes back above the 21, shift of momentum in the histogram, stack DMAs, a little bit more momentum and structure to it. Then I think you can get the continuation higher, right off of weekly support. So it's where you could start your next leg to the upside. Typically, though, we want that bullish daily chart. And I don't think it looks crazy bearish here. Just got a little bit of work to do. So if anything, patient with the early entries. Try to give them time here. See Hodge, Roblox is down 9% in the pre-market. It's going to bounce. Well, they're gapping it down to the 50, so that's pretty much its only shot here, the 50 and the weekly 21 EMA. I mean, so here's a great example of, I love everything about the setup over here, but I'm not trying to work, 5-day till expiration out the money calls. Back myself into a corner where if this thing doesn't unfold perfectly, I'm totally screwed. Let's look at our mastery right now. We have February monthly expiration. So what's that? 2.5 months down the road. Put credit spreads as short strikes here at 105. So something can get this ugly on you down on the key support. You can still potentially hold on to that trade. So I think, we're coming out of a market environment where you find that daily squeeze, you buy those out the money calls, 2-3 days later, you're ringing the register. As nice as that is, this has turned into a tougher market, right? Where you find that good looking setup. And a lot of these things, before we ever get to point B, things get a little bit ugly. So, going back to Phil's question, it all could change today for better or worse. But as the market kind of goes into that consolidation phase, and as we start to see the breadth really, really narrow, give yourself as much wiggle room as possible. I think that's going to be really important here. Really, really important. Yeah, AJ, you could also look at Roblox from this perspective. Because when we look at it from this perspective, it's like, okay, of course. So where are we going to open up at this morning? And mind you, this is why a huge part of my game plan for 2022 is less trades, bigger position sizes, but more trades focused on the weekly 21. Because from a weekly charts perspective, it's like, okay, we squeezed, we ran to about 3 plus ATR. What are we doing this morning? Coming back down to the 21 EMA. So when your overall market starts to lose that kind of, crazy ass momentum, what starts to happen, this is what we're starting to see more and more, is you get the good looking daily chart, but because of that loss of momentum, or your market's not going up every single day, a lot of them end up coming back to the weekly 21. You've kind of seen that with Tesla here. Whereas the market is just pumping on momentum, Tesla's higher, higher, higher. But that momentum in the market and that momentum on Tesla gets it so just through the roof here that once the market loses momentum, you start to get that weekly reversion to the mean. So there could be more downside to come, but I think a lot of what we've seen here over the last few weeks is that concept of reversion to the mean taking place on a weekly chart. John was talking about this a little bit yesterday, I think, in his nightly video. Once your bigger time frames start to lose momentum, you start to get reversion to the mean on those bigger time frames. So there's an extreme here. You look at a monthly chart of the S&P. I mean, we haven't been to the 21 EMA since June of 2020. So as this loses momentum, maybe get your Santa rally. So maybe she's not done just yet. But understand the context of a trend and in the context of reversion to the mean, at some point the market could pull back to 4,000. And I'll show you that on a daily chart because it ain't pretty. But from the monthly chart's perspective, it all has to make some sense, right? What happened here? We squeezed. We fired the squeeze. So this is why we've had so much momentum. Monthly squeezes in the index is firing to the upside. But once we lose energy at 2 to 3 ATR, what typically happens? At the very least, you come to the 8 EMA. Right? So if this market's really strong, right, it could dip to the monthly 8 and then continue to hold up. But I'm saying all this to say, keep a close eye on those weekly charts. But all right, guys, market's going to open up here in 17 minutes. So one more look here at the futures. S&P is blistering up 0.1%. Qs are flat here. Small caps are flat and ugly. So everything is flat here today ahead of JP and the boys. So good luck, y'all. For those of you in Simpler, I'll be in the options room at 10:30. I'll be in the training room later this afternoon. So we'll see what they got in store today. But I wish y'all luck. Talk to you soon. Appreciate your time as always.